What is up guys, my name is Ignas, welcome back to the channel. We are still looking to find the best materials companies and they came upon this article on the Motley Fool. 7 perfect reasons to dump Dogecoin and buy these superior stocks instead. This does sound like a great read for sure. There are a lot of proven ways to build wealth, but few if any have delivered consistently better returns over the long run than the stock market. Here they have 7 reasons why Dogecoin is not the best cryptocurrency to own, but we will not go through these, and this is not why I was interested in the article. By scrolling lower we get a tree of stocks that makes for a smarter investment. And one of those picks is Wheaton Precious Metals, ticker symbol WPM. So the author suggests buying into a historically proven gold play rather than a pump and dump cryptocurrency scheme. So with gold in mind, today for a comparison I have picked Wheaton Precious Metals, ticker symbol WPM, Agnico Eagle AEM, and Kirkland Lake Gold, ticker KL. In order to make the comparison possible, we will be looking into 8 different factors: analysts' price targets, price to earnings ratio, annual revenue growth, price to sales ratio, return on equity, last 4 quarterly earnings results, current ratio, and dividend yield. The best company under each factor will get a point, so it is possible to have from 0 to 8 points, and in the end the stock with the most points will be considered the winner of this comparison. I hope that the rules were clear, so let's begin. The first factor we have are the analysts' price targets. As investors we want to find how far the current share price is away from the average target of analysts. If the current price is under the average target, we will consider the stock as undervalued, and in the end, the company with share prices furthest away from the average analyst target to the lower side gets a point for this factor. For Wheaton, we have 16 price targets of analysts. They range from the lows of $39 to the highs of $85 per share. The average is at $60.45, and the current share price is at $44.60. This means that there is still around 35.5% room for the current price to reach the average target of analysts. For Agnico Eagle, we also have 16 price targets of analysts. They range from the lows of $60 to the highs of $104 per share. The average is at $82.49, and the current share price is at $63.34. So the current price needs to go up for 30.2% in order to reach the average target of analysts. For Kirkland Lake, we have 11 price targets of analysts, and keep in mind that these are Canadian dollars. The prices range from the lows of $39.92 to the highs of $65.17. The average is at $54.73, and the current share price is at $48.93. This means that there is around 11.9% room for the current price to reach the average target of analysts. Results for the analysts' price targets factor are in the table, and with most room for growth, Wheaton gets the first point. Second factor is the price to earnings ratio. It is calculated by taking the current share price and dividing it by the earnings per share. The formula suggests to be looking for a company with a low market cap and a high result in earnings. So in the end, the stock with the lowest price to earnings ratio gets a point for this factor. Wheaton Precious Metals has a price to earnings at 34.92. For Agnico Eagle, the price to earnings is at 23.12. And Kirkland Lake Gold has a price to earnings at 14.61. Price to earnings ratios are in the table, and with the lowest value, Kirkland Lake gets the first point. Third factor is the annual revenue growth. As investors, we want to find that the revenues of a company are on a steady increase. We will take the numbers of the 4 most recent years and compare them one by one. If revenue was on the increase from one year to the next, we will consider it as a +1, and if it was on the decrease, it will be a +0. Then we sum the results up to a minimum of 0 and a maximum of 3, and in the end, the stock with the highest sum gets a point for this factor. We have annual revenues for Wheaton, and going into 2018 there was a decrease to $794 million US. Then into 2019 we had an increase to $861 million, and going into 2020 there was another increase to $1.1 billion. So with 2 increases and 1 decrease in annual revenues, we get a sum of 2. Revenues for Agnico, and going into 2018 there was a decrease to $2.19 billion US. Then into 2019 we had an increase to $2.49 billion, and going into 2020 there was another increase to $3.14 billion. So with 2 increases and 1 decrease in annual revenues, we again get a sum of 2. Annual revenues for Kirkland Lake, and keep in mind that these are in Canadian dollars. So going into 2018 there was an increase to $915 million. Then into 2019 we again had an increase to $1.38 billion. and going into 2020 there was an increase to $2.46 billion. So with 3 increases in annual revenues, we get a sum of 3. Results for the annual revenue growth factor are in the table, and with a sum of 3, Kirkland gets another point. Fourth factor is the price to sales ratio. It is calculated by taking the market cap and dividing it by the trailing 12 months worth of sales. The formula suggests to be looking for a company with a low market cap and a high result in sales. So in the end, the stock with the lowest price to sales ratio gets a point for this factor. Wheaton Precious Metals has a price to sales at 17.22. Price to sales for Agnico Eagle is at 4.53, and Kirkland has a price to sales at 4.34. Price to sales ratios are in the table, and with the lowest value, Kirkland gets another point. Fifth factor is return on equity. It is calculated by taking the net income and dividing it by the shareholders' equity. A high ROE shows that the company is well managed and that money from investors are efficiently handled. So in the end, the stock with the highest return on equity percentage gets a point for this factor. Wheaton has a return on equity at 10.4%. Return on equity for Agnico is at 12.48%. And Kirkland has return on equity at 15.79%. Return on equity percentages are in the table, and with the highest value, Kirkland Lake gets another point. Sixth factor are the last 4 quarterly earnings results. When a company reports earnings, they are compared to expectations of analysts. So earnings can either beat expectations, meet them, or miss them. We will consider that beating expectations is a +1, meeting +0.5, and missing 0. Then we sum the results up to a minimum of 0 and a maximum of 4, and in the end, the stock with the highest sum gets a point for this factor. We have quarterly earnings for Wheaton, and Q2 of 2020 beat expectations, Q3 beat, Q4 beat expectations, and Q1 of 2021 met. So with 3 beats and 1 meet in quarterly earnings, we get a sum of 3.5. Earnings for Agnico Eagle, and Q2 of 2020 beat expectations, Q3 beat, Q4 beat expectations, and Q1 of 2021 beat. So with 4 beats in quarterly earnings, we get a sum of 4. Earnings for Kirkland Lake, and Q2 of 2020 beat expectations, Q3 beat, Q4 met expectations, and Q1 of 2021 missed. So with 2 beats, 1 meet, and 1 miss in quarterly earnings, we get a sum of 2.5. Results for the last 4 quarterly earnings factor are in the table, and with a sum of 4, Agnico Eagle gets the first point. Seventh factor is the current ratio. It is calculated by taking the current assets and dividing them by the current liabilities. As investors, we want to find that the company is able to cover its debts with assets, but also that they're actually being leveraged. So in the end, the stock with the highest current ratio between 1.5 and 3 gets a point for this factor. For Wheaton, the current ratio is at 2.08. Current ratio for Agnico Eagle is 2.3, and Kirkland Lake has a current ratio at 2.24. Current ratios are in the table, and with the highest value under 3, Agnico gets another point. The last factor is the dividend yield. It is calculated by taking the annual dividend per share and dividing it by the share price. A high yield may suggest that profits are being shared with shareholders, and that is a great passive income source that we as investors are looking for. So in the end, the stock with the highest dividend yield percentage gets a point for this factor. Wheaton is paying an annual dividend of 49 cents per share, which is a yield of 1.11%. The annual dividend for Agnico Eagle is at $1.40 per share, which is a yield of 2.21%. And Kirkland Lake is paying an annual dividend of 75 cents per share, which is a yield of 1.94%. Dividend yields are in the table, and with the highest percentage, Agnico gets another point. We can calculate the results, so Wheaton has 1 point, Agnico Eagle 3, and Kirkland Lake 4. This means that with 4 points, Kirkland Lake Gold is considered the winner of this comparison. And that was it. If you got value or new ideas, then make sure to push that thumbs up, it helps the channel a lot. The question for you remains, are you buying any of the gold stocks yourself? Share your buys or sells in a comment below. If you are interested to know exactly when I buy or sell in a stock, then consider the options on Patreon. The recent stock comparisons were all about gold companies, with Newmont, Barrick Gold, Franco-Nevada, Kinross Gold, Royal Gold, and Beachy Gold. If you are interested in any of these, then click on the video currently on the screen. And that was it from my side, thank you for watching, and I will be seeing y'all in the next one.